Hello and welcome to TradeFlow Television,
bringing you valuable analysis and actionable intelligence
through the global commodity markets.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Nearby Chicago corn and soybean futures continue to trade at abnormally large premiums to the new crop contracts, but those deferred prices are on a much different trend than what's been seen in other past years with strong old-new crop inverses. CBOT soybean futures hit contract highs on Thursday, both in the most actively traded May contract and in the new crop November 1. However, the recent uptrend in new crop beans has been stronger as the oilseed battles for U.S. acres against competitors like corn, cotton, sorghum and wheat.
Oil prices will stage a steady recovery this year as vaccines reach more people and speed an economic revival, with further impetus coming from stimulus and output discipline by top crude producers, a Reuters poll showed on Friday. The survey of 55 participants forecast Brent crude would average $59.07 per barrel in 2021, up from last month's $54.47 forecast. This is the biggest month-on-month upward revision for the yearly forecast in Reuters polls going back until at least 2016. Brent has averaged around $58.80 so far this year.
Moving on to the top news in the energy sector.
China's crude oil imports are set to slow in the second quarter after Brent prices hit a 13-month high, cooling demand and capping refiners' margins as they prepare to shut for planned maintenance, industry sources and analysts said. Expectations of a recovery in global fuel demand and tighter oil supplies from Saudi Arabia and the United States pushed front-month Brent futures to their highest since January 2020 this week, up around 30% from January. Chinese independent refiners, who account for a fifth of the country's import demand, have become reluctant to buy cargoes as they enter a low-demand season, while domestic margins have yet to catch up with strong gains in international prices, the sources said.
Global demand for oil-based marine fuels is set to fall in the next 3 decades as stricter carbon emissions rules for the shipping industry kick in and alternative fuel use climbs, consultancy Wood Mackenzie said on Friday. The UN's International Maritime Organization (IMO) is set to formally adopt energy efficiency regulations in June that aim to reduce the carbon footprint of new and existing ships by 40% by 2030 compared with 2008 levels. By 2050 the IMO aims to reduce the overall greenhouse gas emissions from ships by 50% from 2008 levels. Next, we have the top news in metal markets. China's metal recycling body on Friday issued a second list of 26 foreign suppliers that would be allowed to export copper and aluminium scrap to the country and 44 certified domestic importers. The world's top metals consumer had banned imports of solid waste from 2021 but gave the green light to high-grade metals scrap meeting new standards that had been reclassified as recycling resources. The second batch of certified providers included U.S. companies OmniSource LLC and Golden Bridge International Group as well as suppliers from Italy, Britain, Japan, Malaysia, Hong Kong and other countries, according to the recycling branch of the China Nonferrous Metals Industry Association.
The European Commission on Friday began to review a possible extension of steel import curbs introduced in 2018 after Washington imposed 25% steel import tariffs. EU steelmakers face global overcapacity and non-EU exporting countries are seeking markets for piled-up stocks, with various trade restrictions and no sign the United States is about to remove tariffs, which have closed the country to many exporters. 12 EU countries have requested an extension of the EU curbs beyond the current expiry date of June 30.
We will now look at the top news in the agricultural sector.
China's soymeal futures slid nearly 5% in their sharpest decline in 8 years on Friday, as investors took profit and new African swine fever outbreaks stirred concerns over demand. The most actively traded soymeal futures on the Dalian Commodity Exchange for May delivery fell 4.86% to 3,485 yuan per ton following 4 days of gains, amid worries the new pig disease cases would hit demand for the major feed ingredient. Prices were rising mainly because soybean cargoes would be limited in March, and people did not think the African swine fever outbreaks were that severe, said a manager with a meat producer in northern China. That is all for today's news on the commodity market. Stay tuned to TradeFlow TV as we continue to provide you with more updates. You can also follow us on Twitter at TradeFlow TV1, which allows you to watch our program on your mobile device or desktop.